Hi, I am Matt Kerfman from the Richmond Brothers, and we are entering the last few weeks of the dreaded tax season. Getting yourself ready to file taxes can feel like a daunting task, but there are some actions you'll want to take now, or at least be aware of, to hopefully make it less painful. In this short video, I'm going to talk about 3 things that you should be aware of and be ready to look at before you file your 2022 taxes. So, the tax filing deadline is approaching, and if you haven't filed your taxes already, we're here to share 3 things that you could do to set yourself up for a win this tax season. First is make your IRA contributions or your Roth IRA contributions by April 18th of 2023. For last year, you still can contribute up to $6,000 into a Roth or a traditional. And if you're 50 or older, you can put away an additional $1,000, so making that $7,000 for the previous year. If you happen to be a client of Richmond Brothers and you're watching this video, please make sure to drop your check off made out to Fidelity Investments in almost all cases by April 10th, and that way there's ample time for us to process and get it deposited to your actual account. Alternatively, if you already have an account with linked banking instructions, just let us know and we can use that to help you make a contribution. Second, for those of you having to pay quarterly tax estimates into the 2023 year, submit your first quarter estimated tax payment if you are required to do so. But remember, don't lump it together with your 2022 taxes that you owe on your 1040. IRS may not post it correctly, and you'll spend a lot of time later straightening it out. So make sure those are 2 separate pieces. If you have questions on that, check with your tax preparer or your CPA. And then third, make sure to just do a quick review of your 2021 tax return. This can help refresh your memory on forms that you may need and also tax deductions or credits that you qualified for last year, just to make sure you're bringing it all together. A common miss or overlooked piece would be if you're over 70 and a half and you have an IRA and you processed a QCD or qualified charitable distribution in the 2022 year. There's no indicating factor on the 1099 that says you did that. So you need to let your tax software or your tax preparer know so you're not charged double tax on that. One last item regarding a pesky topic in the tax code is a K1 tax document. If you have an asset in your portfolio that is held outside of retirement accounts and you're a Richmond Brothers client, K1 tax documents are set to be published hopefully by March 31st or over the weekend. As soon as we can gain digital access to them, we will use our secure email system to send them out individually to you. If you happen to own a K1 investment or asset inside of a retirement account, such as an IRA or Roth, according to Fidelity, filing and income tax payments do not impact your individual tax return in this case. Fidelity, as custodian, is responsible for filing a 990T on behalf of each retirement account if and only if it exceeds the unrelated business taxable income threshold, which shows up on that form. So what we do at Richmond Brothers, as soon as those K1s are published, we submit them to Fidelity on your behalf. Fidelity's department reviews them, makes that determination. So if you see anything about a 990T letter, that's just making you aware, and that K1 will be submitted to Fidelity. Outside of that, we will use secure email to send K1s that are necessary as beginning as Monday, Tuesday, Wednesday of early April 2023. Obviously, tax time comes around every year. You're not alone. We're here to help however we can and provide suggestions and hopefully provide solutions. If you have any questions about what I've discussed or you'd like to speak personally, please use the form below to send us a message and we will respond personally. In the meantime, thanks for tuning in and make it a great day.